Today, finally, we will learn the most powerful trading concept of price action trading. Range and deviation trading, quite complicated but extremely powerful. I have to divide these concepts into 4 or 5 different videos. In the first video today, we'll learn what are ranges, what they do, how to identify and draw ranges before they happen. In the next 2 videos, we will learn 4 or 5 different range and deviation trading setups and strategies. With other videos, I'll go over real trading examples and trading practices for day trading and scalping. We have so much to cover. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. With this video, I'll cover the basics of range trading. If you are looking for a structured table of contents, I set it up for you. You can find it on Google Drive or directly from my website, which is in the description. It is important to watch videos in order, so you will not miss anything. Before we start, I would like to say a couple of words about range and deviation trading. It is probably one of the most powerful price action trading concepts in the world, if you can master it. Mastering range trading could take years of practice and effort. The biggest problem is subjectivity. If I give the same chart to 100 different traders, they would give me back 100 different ranges. Enough with this intro and let's start. The beauty of the range trading is it's available all the time. All markets range around 70% of the time. The rest 20-30% probably trending, pumping or dumping. Ranges are fractal structures. They can happen in any time frame. Also, there could be big and giant ranges or small ranges in the same time frame. Moreover, there could be ranges within ranges. This is very common. All in all, ranges are everywhere you can imagine. You will start to see them all the time after a couple of months of practice. Now, what exactly do you see in this chart? Nothing, right? Do not worry, I was exactly like you years ago and see nothing. But with a lot of practice and testing, I can see things like in the matrix now. The first thing I see is this mega range, in which price consolidates inside from top to bottom and bottom to top. Do not worry, we will learn how to draw and identify ranges really soon. This is just a warm-up. Now, if you look closely, you will see small ranges inside the big range. Many of them, each of them accumulating orders and starting a new big move. And the price continues and continues to range everywhere. As I said before, 70% of the time, the price will be ranging whatever you trade. Let's talk about the structure of ranges. A range actually is a combination of premium and discount zones. Price will be bouncing inside the range. It is basically a consolidation period. You can practically say a range is a consolidation. Ranges have 4 significant parts. First, the EQ point, equilibrium, the fair price. If you follow the free trading course, you'll remember the supply, demand, equilibrium, and the fair price. The other 2 significant parts are range high, which is when the price becomes expensive, and range low, where the price is cheap. And there are the deviations. These are occasional moves. Basically, price either become extremely expensive or extremely cheap by going out of the range for a while. Deviations are not essential. Some ranges never deviate actually. Each range is unique. There are no written rules for the ranges. Let's check out the structure of this range. As I said before, we'll learn how to draw ranges really soon. But first, learn the basics of it and dissect the ranges a bit. Above, we have the range high, basically a resistance area. And below, we have our range low area, a natural support area. In the middle, we have the EQ, fair price point, one of the most important part of the ranges. Sometimes prices are out of the range boundaries. We call them deviations. In this example, we have 3 deviations. Now, this is the basic structure of a range. If you observe your charts, you will see thousands of ranges keep happening right now. When do ranges happen? Actually, it is an easy concept to understand. After huge pumps or dumps, or uptrend or downtrends, price will need to rest. People need to take their profits, and some people get ready for new positions. So many orders are placed, accumulating. So ranges happen after big or sudden moves in the markets. What exactly do ranges do? It's basically preparing the price for a new big action. After a range, price will do a new big move by starting a new trend or sudden pump or dump. So the range is the expectation period, like buying tickets to win a prize, but millions of people. Then after a while, the big prize comes. You may ask how all this happens. Basically speaking, ranges are where the most volume gathers. Millions of traders will be opening new positions during these consolidations. Some will do an analysis of the asset and think that the price will go up or down. There will be millions of orders and opened positions for each long and short. We call this phase order accumulation. We will start to see the stop-loss order pools above and below the ranges. At some point, the range will explode one side, upwards or downwards. Now, these explosions could start new trends, or it could be a fake trend trap, like the power of 3. We will talk about it in the next videos while I'll be teaching the strategies. This is a nice example of ranges. Price dumps suddenly, a very strong and powerful dump. Then the consolidation period starts, and the range period prepares the price for a new big move. Then the pump happens, very suddenly and powerful. After that, the price enters another period of a range, preparing for the next move. Then the next sudden move starts. Yes, this is what is happening in the markets every single day, thousands of times, with multiple time frames like 1 minute, 15 minutes, or 1 hour. How to draw ranges is probably the most subjective matter of price action trading. I will try to make it as simple as possible. One of the most important points of the range is the EQ point, the middle point. Technically, the price should be quite struggling around the EQ point a lot. It could be small rejections, it could be small ranges or small consolidations around the EQ point. The keyword is struggle or rejection. Remember the SR Flip videos and how we counted the rejection points? It is similar to that. You basically count these points of struggles and rejections to identify a possible EQ point. The higher the numbers are better. What I mean here is, if there are multiple possible EQ price levels, you need to choose the highest number. Okay, as you know, it's extremely easy to identify a range after they happened. Anyone can identify ranges after they are completed. We have to learn how to identify ranges before they are completed. The best way is to practice on completed ranges. Close the half of the range and learn the characteristic of the ranges. First of all, to identify a range should be already started, which gives us some price action and clues. Otherwise, it's practically impossible to guess if the price will range or not. I want you to imagine that the right part of the range has not happened yet, not existing yet. We have the first part, some price action to work on. As I said before, we need to see some price action to identify a possible range before it's completed. Let's work on the EQ point. Remember the keywords: rejections and struggles. If you look closely here, you'll notice the price is rejected 3 times in the beginning. Then, if you continue to look, the price struggles around this price level 3 more times. Altogether, you can count 5-6 times a rejection or struggle. This way, I determined my possible EQ point. Do not worry, I'll teach you a much easier method now. Please use the path tool in the trading view and draw an overall movement from the candlestick charts, focusing on the wicks, not the close or opening of the candlestick. By the way, do not use the line charts, they are inaccurate. Then hide the candlestick charts with the hide button that looks like an eye. Everything will become much clearer to your eyes. You can see the rejections and struggle points in the middle and count them easily. This method is great for beginners. Next is the range high and range low points. It's exactly the same as the EQ point. Range low should act as overall support zones, but do not think of these areas as straight lines. Think of them as zones, with price being rejected or struggling a lot. Again, the keyword is the same: struggle or rejections. Just like the EQ, we count these rejections or small struggles, or tiny ranges and consolidations. All of them are countable. The higher the number is, giving the clear range low or high. This is how we determine the range between low and high. If there are multiple price levels with struggles and rejections, we choose the highest numbered price level. We will use exactly the same method for identifying the range high and low. I already counted here, but again, use the path tool and draw the overall path manually, then hide the candlesticks. Then start counting rejections and struggle areas to identify the best possible range high and low levels. Now finally you have a range, probably the most possible and best range you can ever draw before the range is completed. If there are multiple possible range high and low price levels, you need to choose the highest number counted price level. The key is the count of the rejections and count of struggles. The highest number is the winner. One more time: struggles, rejections, and the highest number count on a single price level. Third, the range low should be able to push the price to the range high, and the range high should be able to push the price to the range low. These movements can happen at once, like a straight line, a pump or dump. Or they could be a small trends that slowly go from range low to high. Sometimes it stops around EQ and rest, and then continues again. Basically, the purpose of the range high and low act as a wall, so the price can bounce between them like a tennis ball. This is a critical part of the ranges. You can see here how the range high pushes the price to the range low, and the range low pushes the price to the range high. And it keeps happening endlessly. This is one of the most important part of the range. As I said, it can happen at once, very suddenly, like here in the first push. Or it can be a slow trend and progressing slowly, taking its time. It does not matter how it happens. Again, you can use your path tool to draw your range move in order to see things clearly. This is a real good practice for beginners. I used to do this a lot. Now I do not need it. I can see the ranges from miles with years of practice. Finally, the deviations. These areas are where the price occasionally pierces through the range high and low zones. Deviations are important. The price needs to go back into range if you want to call them a deviation. If it does not come back into the range, it is not a deviation. This is why we sit and wait to observe the deviation, because it could be easily the start of a new pump or dump and the end of the range. We do not know this until the price comes back into the range. So it is not wise to trade deviations blindly. But you are already an expert at price action trading now. With the free trading course, we never blindly jump to trades. We look for multiple confirmations. Let's see this example. Identifying the deviations is the easiest part of the ranges. They basically happen occasionally, as you can see here. Piercing range highs or range lows that we already determined before. I hope that I made things a bit clear. But do not worry, range and deviation drawing, analysis and trading is the most complicated subject of price action trading. No one gets it at first. It requires regular daily practice to master it. Now next week we will start on trading setups and trading strategies of ranges and deviations. Okay folks, with this video we completed the first part of range and deviation for day trading and scalping. See you in the next part of range and deviation trading. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.